Let's start off with the most likely outcome. We're going to hear from Jay Powell later today. He's just as dovish as he was when he went to Capitol Hill, and it looks like we're on track for those 3 cuts. How do you advise your clients?
Yeah, this is the position that this is the situation we're positioned for. So we do expect about 100 to 125 basis points of rate cuts this year. And we do think that's a situation where we'd expect the market to continue to rally, for the leadership to continue to broaden. And importantly, we would expect almost a barbell type of situation in your portfolio. So secular growth would continue to do well because we think rates would come lower. This recent backup in rates would reverse, but we'd also see some strength from small cap and other cyclical parts of the market. From a sector perspective, I think that's a setup that is good for banks.
I can hear you.
Because I think you'd get a re-steepening of the yield curve and continued healthy growth of the economy, so the loan books would do well.
All right, Meghan, thank you very much, and thanks for staying focused right there. I know we were hearing Vance checking his mic while you were talking. Vance, I'm going to come over to you. Similar question, but I do have just a bit of a tweak on it for you. Before we were expecting as many as 6 cuts. There were some people on that end. Now we're down to 3. How important is it that we get these 3 cuts? And if we do get them as expected, how do you advise your clients?
Well, the trend's up. I think as long as the trend's up, you can tend to trade that. But even if we only get 1 cut or 0 cuts, the Fed's still dovish. Even as of a couple of weeks ago, Powell said he was going to dial back a restrictive stance on what they're doing. So I'm pretty bullish still going into this, even if we don't get any cuts at all this year. I think that inflation's starting to drop at a moderate pace. I think that's the direction we want to see it go in, and so I'm positive.
All right, let's play devil's advocate. What happens if we hear a very hawkish Jay Powell tomorrow, and it looks like we're not going to get any cuts this year? Again, we had the Apollo chief economist on our show saying he doesn't see any cuts. Richard Bernstein on CNBC yesterday saying he doesn't see any cuts. Vance, I'm going to stick with you. What happens if we don't get those cuts? Where do you advise clients to move their money?
Well, the Magnificent Seven's done very well, even though it's kind of pared down to 6. But I still think that, you look at quality stocks like O'Reilly or General Dynamics, they're still breaking out and making new 52-week highs. There's a lot of opportunity out there, and a lot of these companies are making a lot of money. It kind of goes back to what the old statement was: more money's been lost in worrying about a correction than the actual correction itself. So, let's try to stay with the trend and trade the trend, which is moving higher.
So, Vance, before I go over to Meghan, you're not worried about a recession possibly if we don't see any rate cuts? That doesn't change your perspective at all?
Well, it gives me pause, but I'm not going to lose sleep over it. I think that we'll have to trade the market the market that we have, not the one we wish we had. And the trend again's still up. So it does give me pause, but I'm not losing any sleep over it yet.
All right, so Meghan, Vance is getting a good night's sleep. He's also checking his mic while you're talking, but we're past that point. What about you? How do you advise clients, Meghan, if we don't get any cuts this year? Does that change your perspective on not only the market, but the economy?
And I apologize. I was having some audio trouble. Continue to, I think, have a little bit of challenge. But I think context does matter. And I think that might be what Vance was saying, which is if we're getting no rate cuts from the Fed, it is possible that that is because we are getting much better growth from the economy and a very resilient labor market, as well as maybe some stickier than we'd like inflation. But in that situation, equities could do quite well. Earnings could do well. That is not our expectation. And we do think inflation is going to continue to move lower. And if inflation does continue to move lower or even stay where it is, then the Fed is too restrictive and does risk a policy mistake and a possible recession, maybe not mid-year, maybe not even in 2024, but possibly in 2025. I think in that situation, you want to be really careful of both long duration assets like fixed income and tech, as well as small cap. We have an overweight to small cap, but we're really focused on higher quality companies that have healthy balance sheets and consistent, stable profitability. But even those high quality companies within small cap would likely get hurt if the Fed is not cutting at all, because they are so much more reliant on the debt markets and more interest rate sensitive.
Man, we had a lot of people come on the show and talk about small caps. Fundstrat, Tom Lee's thinking that small caps could rally as much as 50% this year. I do want to ask you, and I want to come back to this. I know you said you're bullish on small caps, but are they dependent on at least 3 rate cuts in your mind, or is it just a cut continues your thesis on small caps?
I think small cap does better if we get 50 to 100 or more basis points
Right.
of rate cuts this year. I'm a little bit worried about small cap if the Fed moves to a more hawkish stance and is only cutting once or not at all. Again, because you have a lot of companies in the small cap index that are not profitable. And if we're getting slowing growth as we expect, that profitability becomes more expensive. You also have a lot of maturities that are going to be coming due on the debt market in small cap in 2025 and beyond. And so the bull case for small cap does depend on rates moving lower at some point.
All right, Vance, we got to get going really quick. Your view on small caps, I know you like them as well. Do we need 3 cuts, just a cut? Does that matter for small caps? I know you said it doesn't matter necessarily for the broader market.
Well, I like small caps also. I think the market, Frank, I've been on your show and I've been talking about the market broadening out. Well, let me rephrase that. The market's inching out, but still, I think the market is starting to spill over into these small caps, and I'm very bullish on it going into the next 2 or 3 quarters of the year. Even if he doesn't, as long as he doesn't raise rates, I think it's still positive for small caps because they've been so beaten up and they're such a good buy right now.